Good morning, everyone, and welcome to today's webinar regarding the Community Development Block Grant Disaster Recovery Multifamily Housing Accelerator Project Solicitation and Program Policies and Procedures. My name is Joseph Harney, and I am the Section Chief here at HCD over the multifamily housing programs. And we're here to present this webinar and information on this upcoming funding offering. And here to give the presentation are our consultants from Civics, my senior consultant, Diana Searle, and then Clint Whited and Jet Black-Mertz. So with that introduction, I will let them move on to the presentation.
Thanks, Joe. So just a few housekeeping items for everyone. All of the attendees will be muted for the duration of the webinar. We are recording. You can submit your questions to the Q&A box. You can also submit questions to dr-mhp@hcd.ca.gov. We will be compiling the answers to all the questions in an FAQ that will be posted after this webinar. We will also be posting a recording to our webpage at a later date. As we're going through the presentation, capitalized terms that appear on the slides are defined in the solicitation and in the policies and procedures document. And then there's also a link to our webpage. Next slide. I'm going to turn it over to Joe for the program overview.
Thank you, everyone. So the DR Accelerator program is authorized pursuant to the state of California's CDBG-DR action plan for the 2023 disasters that was approved by HUD August 5th, 2022 to address presidentially declared wildfire and flood disaster DR-4683 from December of 22 and January of 23. The DR Accelerator program will address gaps resulting from the current shortage of tax-exempt bond allocations and low-income housing tax credits. $52.5 million will be available for new construction of low-income multifamily housing projects with a funding gap. Applications will be due as of March 21st, 2025 at 4 p.m. If you have any questions regarding the program or the upcoming application, please contact us at dr-mhp@hcd.ca.gov. Next slide, please. Very good. So for our first part on eligible projects, firstly, eligible projects must have received a prior HCD loan commitment before December 31st, 2023 from one or more of the following sources listed below. The Affordable Housing and Sustainable Communities Program as a direct loan from the department. The Home Investment Partnership Program, again, a direct loan from the department. All of these will be in the form of a direct loan in order to be eligible. The Home Investment Partnership Program for the American Rescue Plan. The Housing for a Healthy California Program. The Joe Cerna Jr. Farm Worker Housing Multifamily New Construction Program. The Multifamily Supernova Housing Program, the National Housing Trust Fund Program, the Supportive Housing Multifamily Housing Program, Transitional Oriented Development Implementation Program, the Veterans Housing and Homelessness Prevention Program, and the No Place Like Home Program funded projects that do not qualify for an award under DR Accelerator. unless the No Place Like Home award is a loan that is administered by the department. No Place Like Home awards administered by entities other than the department are not eligible for an award under DR Accelerator unless the project also receives a loan award from one of the other qualifying HCD funding programs identified in this solicitation. Home key funded projects do not qualify for an award under DR Accelerator unless they too also have a program award from another qualifying HCD program. So the application that results in HCD issuing an award letter from an existing HCD loan commitment must have shown low-income housing tax credits as one of the development funding sources. It is the duty and responsibility of each applicant to review the provisions, requirements, and limitations of all funding sources applied for and obtained for a particular project, program, or activity in order to ensure that each and every requirement of these funding sources is compatible with all program requirements and restrictions. Incompatibility of funding sources will result in a denial or cancellation of an award, or may result in a placement of conditions or limitations on an award, all as determined by the department in its sole and absolute discretion. In accordance with 24 CFR 570.208, all DR Accelerator funded activities must satisfy a national objective. For DR Accelerator, all projects will meet the low to moderate income housing national objective, known as the LMI objective. Proposed projects may be mixed income. However, DR Accelerator funds will only be applied to the affordable units restricted for occupancy to LMI households. And for eligible applicants, I'll turn it over to Clint Whited.
Thanks, Joe. Under eligible applications or eligible applicants for DR Excel, DR Excel applications must be submitted by and include all sponsors and applicants associated with the existing HCD loan commitment that makes you eligible to apply. So applicants are the entities that are applying for DR Excel funding for their project. Upon receiving an award of DR Excel funds, the applicant or co-applicants will both individually and collectively be referred to as the sponsor. So the sponsor is defined in the Health and Safety Code 5675.2 and 5669. In situations where the sponsor comprises two or more entities, the entities may be referred to both individually and collectively as a sponsor. Each entity may also be referred to individually as a co-sponsor in legal documents. The sponsor structure needs to include any local public agency that's a co-sponsor of the existing HCD commitment that makes you eligible for DR Excel. Those would include local public entities. Those local public entities should execute the standard agreement as duly authorized co-sponsor prior to construction loan closing. The sponsor entities need to be bound by the DR Excel standard agreement and by each and every one of the DR Excel terms and conditions and restrictions. Next slide. DR Accelerator funds shall be used to pay the lenders on the project. So for example, construction lender, and that will occur at permanent conversion for the following documented DR Excel eligible project costs that are incurred by the sponsors. Those include property acquisition, architectural appraisal, engineering, environmental, legal, and other consulting costs and fees, which are directly related to the planning and execution of the project, and which are incurred through third-party contracts. Eligible costs also include escrow, title insurance, recording, and other related costs, building permits and state and local fees, local development impact fees, developer fees as set forth in the Uniform Multifamily Regulation, mobilization, demolition, site prep, and cleanup, interest and financing costs, residential construction costs, and other on-site improvements that are directly related to the project. Slide. On the flip side, ineligible uses of CDBG-DR MHP funds under the DR Excel program include costs incurred between the date of application and environmental clearance when the authority to use grant funds is issued. that constitute an adverse environmental impact or that limit the choice of reasonable alternatives pursuant to 24 CFR Part 58, 22A. Application development costs, advances of any type, including construction, facility operating or maintenance expenses, reserves and contingencies, furnishings, offsite improvements, except where the improvement is contiguously adjacent to the project parcel and serves the housing, construction or any other cost-related non-residential component of the project, and reimbursement of sponsors' capital investment or prepaid expenses. Next slide. The cost eligibility determination. HCD reserves the right in its sole and absolute discretion to approve or deny the applicability and eligibility of costs on a per application basis. HCD requires that construction costs are reasonable and consistent with current market costs for the area where multifamily construction will take place. Slide. With respect to capitalized reserves and withdrawals, HCD will not allow capitalized reserves in excess of those approved in connection with the existing HCD loan commitment, nor local agency fees or payments that would have only been required if bonds were issued or that were not shown in the application for the existing HCD loan commitment. HCD also reserves the right, consistent with applicable law, to require prior written approval from the department for all reserve withdrawals, whether the reserve was required by the department or not. DR Excel funds may not be used to fund capitalized reserves. There's some limitations on financing. DR Excel funds are not intended to supplant local public agency funds. Accordingly, any local agency resources shown as committed in the applications for any existing HCD loan commitments must be included in the financing proposed in the DR Excel application at the same or higher level of funding as previously identified. This includes sites provided at below market rate cost as well as funds. Similarly, DR Excel funds are not intended to supplant performing debt. The amount and terms of performing debt are shown in the DR Excel application and must generally remain the same or be higher and more restrictive than the amount and terms shown in previous HCD applications, unless there are extenuating circumstances that are clearly explained in writing by the applicant and agreed to in writing by HCD in its sole discretion. Examples include requests for reducing performing debt, or the term of the performing debt will be reviewed on a case-by-case basis and are not guaranteed for approval. And reduced principal loan amounts of performing debt must include corresponding reduced amount in the development budget. With respect to the unit mix, there are some limitations in the unit mix. The department requires that unit mixes, which include the number of units at various area median income levels and bedroom counts, those unit mixes need to remain substantially the same as shown in the most recent department application for your existing HCD loan commitment, or if the project has an application which has been submitted to CDLAC or TCAC, the application submitted to CDLAC or TCAC, which was ultimately unsuccessful in securing a bond allocation, or low-income housing tax credits. So consistency in the unit mix in your DR Excel application is key, and it should be consistent with the prior loan application or the CDLAC TCAC application. Next slide. Projects must be located in the most impacted and distressed areas. So those eligible projects must fall within the mid for FEMA DR 4683, consisting of the following 5 counties: Santa Cruz, San Luis Obispo, San Joaquin, Ventura, and Merced. Additional eligibility requirements. The application that resulted in HCD issuing an award letter for what we're terming the existing HCD loan commitment must have shown low-income housing tax credits as one of the development funding sources. It is the duty and responsibility of each applicant to review the provisions, requirements, and limitations of each funding source applied for and obtained for a particular project, program, or activity, in order to ensure that each and every requirement of those funding sources is compatible with all of the program funding requirements and restrictions. Now we'll move into the threshold application requirements. Proposed project must fulfill all the requirements on the following slides. Any application which does not meet threshold will not move forward in the scoring process and will be ineligible to receive a DR Excel award. So threshold requirements, the project must comply with the requirements specified in the project solicitation document. The project must submit or the sponsor must submit a complete DR Excel application by the stated deadline using unaltered application forms, and you need to include all of the required attachments. The sponsor also must not have closed on construction funding or already started construction. Each private entity applicant shall submit an authorizing resolution with the application that in the department's reasonable determination materially comports with the DR Excel requirements and is legally sufficient. The applicant shall submit a complete set of its organizational documents and all amendments thereto. And private entity applicants and all sponsors must be qualified to do business in and be in good standing with all agencies, departments, and instrumentalities of the state of California, including but not limited to the California Secretary of State. The project application must demonstrate financial feasibility for the 20-year period of the DR Excel loan. It must agree to comply with all applicable federal cross-cutting requirements, including but not limited to prevailing wages, Section 3, and environmental review. The project must, if it is located in a floodplain, meet CDBG-DR elevation requirements and maintain flood insurance for perpetuity. And the project must not be located in a floodway. Now for more on funding amounts and terms, we'll turn it over to Diana Searle.
Thanks, Clint. In terms of the funds that are available for the DRSL program, the program will address gaps resulting from a current shortage in tax-exempt bond allocations and low-income housing tax credits. The maximum amount of DRSL funds available under this solicitation is approximately $52,576,000. Funds are available for low-income multifamily housing projects with a current funding gap, and there is no project award cap. Moving to the application evaluation process, the application review process consists of 3 distinct phases: initial threshold review, rating and ranking, and project feasibility review. Applications meeting threshold requirements will be rated in accordance with the application scoring criteria and ranked in order of their point score. Awards will be issued to the highest ranking projects for which a complete funding gap may be filled that would allow the project to move forward to the closing table without the need for any other additional funding commitments. Eligible projects will be scored based on the policy objectives included in the action plan approved by HUD. The assistance terms for DRSL. For all projects, DRSL assistance will be in the form of forgivable loans with terms of 0% interest for 20 years with no residual receipts payments or periodic payment requirements during the life of the DRSL loan. The loan will be forgiven by the department at the end of the 20-year loan term as long as all of the following conditions are satisfactorily met. The sponsor and borrower, if a separate entity, remain in good standing with agencies, departments, and instrumentalities of the state of California. The project is not in default under any of the terms of the department's loan documents or standard agreements for the project. Negative points have not been assessed against the sponsor and borrower, again, if a separate entity, during the previous 5 years in connection with any department-assisted project. And the project meets the low to moderate income national objective for the entire term of the DRSL loan. Continuing with the terms of assistance, the loan shall be subject to full repayment if during the 20-year term the project is converted to market rate housing or sold or refinanced with a distribution of net equity. If the DRSL applicant is recommended for and receives bonds or low-income housing tax credits from CDLAC or TCAC prior to the award of the DRSL funds, the DRSL application will be automatically withdrawn. If the DRSL sponsor or borrower receives bonds and/or low-income housing tax credits or other funding awards subsequent to the award of the DRSL funds, the DRSL award will be canceled or reduced. Developer fee limits under this program are as follows. The total developer fee for the project, regardless of the number of other HCD funding sources, shall not exceed the lesser of $2.5 million, the sum of 15% of the project's unadjusted residential construction related eligible basis, 5% of the project's unadjusted acquisition eligible basis, and 15% of the eligible basis for the project's non-residential costs pursuant to UMR. Or the amount approved by HCD as payable from development funding sources under the terms of the existing HCD loan commitment. Moving over to the affirmative fair housing marketing plan. Sponsors shall advertise projects and units to fill vacant units or to develop a waiting list of interested applicants for the subsidized housing provided by the project. DRSL applications, where applicable, must include an affirmative marketing plan developed using the Affirmative Fair Housing Marketing Plan Form, HUD 932.82. Affirmative marketing plans are to be submitted with applications and shall demonstrate that the proposed project will affirmatively further fair housing and adequately address the tenant market in ways that are likely to lessen racial, ethnic, or low-income concentrations and/or promote affordable housing in low-poverty, non-minority areas in response to natural hazard-related impacts. Moving to the project approval process, DRSL project awards shall be approved by the department's internal loan committee based on the information included in the HCD staff report, also known as the project report. The project report will include project criteria approved by the department at the time of the award of the DRSL loan funds. The project criteria may be amended only upon HCD's written approval and in its sole discretion. Amendments made to the project after ILC issues an award may result in a complete re-review of the project and the potential imposition of additional conditions and restrictions by the department. Moving over to the commencement of construction deadline for this program. All DRSL awarded projects must commence construction no later than 180 calendar days from the date of award. Commencement of construction means the first land disturbing activity associated with the project, including land preparation such as clearing, grading, and filling. The department may, in its sole and absolute discretion, extend this deadline due to conditions beyond the control of the sponsor for a period not to exceed 90 calendar days. Failure to meet the commencement of construction deadline or any department approved extension thereof will result in the forfeiture of the DRSL award. Such failure will also cause the department to assess negative points when scoring any future applications by the sponsor for department funding, unless the sponsor secures a CDLAC or TCAC allocation and the DRSL funds are disencumbered by the department's deadline. Moving on to the legal documents associated with this program. There will be a standard agreement. Upon the award of the DRSL funds to a project, the department shall enter into one or more agreements with the sponsor, including a standard 213 standard agreement, which shall encumber the funds from DRSL subject to specific conditions. Those conditions include, but are not limited to, the permitted uses of funds, performance milestones, progress metrics, reporting requirements, remedies, sponsor liability, and federal and state laws and requirements. Additionally, the program will have loan documents. The DRSL terms, conditions, and restrictions will be expressly incorporated into the loan documents of the existing HCD loan commitment, including the promissory note and the deed of trust of the existing HCD loan, as well as any other existing HCD loan documents as necessary and appropriate. All such documents will be executed and recorded at permanent financing close of escrow. Continuing on with the legal documents, there will also be a regulatory agreement. The department will append and incorporate a DR exhibit into the existing HCD loan commitments regulatory agreement to be recorded against the property. The exhibit will set forth the project's DR specific requirements, terms, and conditions, which include a 55-year period, the same income, occupancy, and rent restrictions that were represented by the sponsor's most recent unsuccessful application to TCAC or CDLAC, if applicable, and will require the same service amenities that were represented in that application. If the sponsor did not apply to TCAC or CDLAC for the project, then the exhibit will impose, for a 55-year period, the same income, occupancy, and rent restrictions as set forth in the most recent existing HCD loan commitment. This program will also have cross-default provisions. So a default under any DR loan may, at the election of the department and in its sole discretion, constitute a default under any other HCD issued loans for the project and vice versa. Moving on to the environmental review requirements. Environmental review must be performed on the project prior to federal funds being dispersed. Sponsors shall prepare the appropriate level of environmental review and submit the environmental review document, complete with the appropriate citations and supporting analyses and studies to HCD for review at the sponsor's expense. The environmental review shall document compliance with 24 CFR Part 58 NEPA and all related laws, authorities, and executive orders. For DRSL, HCD is the responsible entity and will review the sponsor's submitted environmental review records for compliance with 24 CFR Part 58 prior to submitting a request for release of funds directly to HUD. HUD shall then grant the authority to use funds. Any conversion to exempt for the environmental review must be documented, and the documentation must also be submitted to the department as part of the environmental review record. Sponsors are responsible for working with the city or county where the project is located to ensure compliance with CEQA, including the submission or designation of applicable waivers to the CEQA clearinghouse with a copy submitted to HCD. Pursuant 87 Federal Register 6364, HCD may accept another federal agency's environmental review. The DRSL program will not provide funding for projects that have a finding of significant impact. No work may begin on a proposed project or a proposed site acquisition before both the federal and state environmental review processes are complete, even if that work or acquisition is being done with non-federal funds. Subsequent to submission of an application by a sponsor to HCD for the use of DRSL funds, there can be no choice limiting actions on the part of the sponsor, developer, owner until the environmental clearance is received in the form of the authority to use grant funds, or an environmental clearance letter is issued by HUD or the department. Moving over to the construction standards for this program, all residential construction projects, where applicable, must comply with housing construction codes for the state of California. All units developed under DRSL must meet these codes, as well as any locally adopted codes and ordinances. The building standards are published as a part of the California Building Standards Code under the California Code of Regulations, Title 24, and construction standards in the standard agreement must meet or exceed all applicable requirements for housing or building construction. The following standards shall be met as applicable: the California Building Codes, the California Green Building Standards Code, also known as CalGreen, the Wildland Urban Interface Building Codes, WUI, National Floodplain Elevation Standards, and Resilient Home Construction Standards. Additional details on these can be found in the solicitation. Continuing on to the rent standards for this program, DRSL uses the annual Multifamily Tax Credit Subsidy Projects, MTSP, regular income and rent limits published by HCD annually for each county to determine the rent standard. DRSL awards will tie into the existing HCD loan commitment. Therefore, the maximum rent to be charged shall be consistent with the requirements of the existing HCD loan commitment. DRSL will waive the multifamily tax credit subsidy standard to be compatible with the rent standard of other sources as described in the existing HCD loan commitment. The unit mix and rent standards shall remain substantially consistent with the approved applications for the existing HCD loan commitments, even if the sponsor ultimately did not secure the funding from all proposed regulating sources. Additionally, if an affordable unit receives a federal or state project-based rental subsidy, and a very low-income family pays as a contribution towards rent not more than 30% of the family's adjusted income, then the maximum rent, the tenant contribution plus the project-based rental subsidy, is the rent allowable under the federal or state project-based rental subsidy program. Moving over to rules around the use of operating income. Approved uses include an approved deferred developer fee, provided that the aggregate of the developer fee paid from the sources and paid from the deferred fees and paid as deferred shall not exceed 3.5 million. Or for projects receiving low-income housing tax credits, the maximum as allowed by TCAC, whichever is higher. Operating income can also be used for asset management, partnership management, and similar fees, including fees paid to investors, in an amount not to exceed the aggregate sum of the amount for the current year equal to $38,168 for the year 2023 and increased at a rate of 3.5% for each subsequent year, plus unpaid asset management, partnership management, and similar fees accrued for a period not to exceed 3 project fiscal years following the year during which they are earned, up to the difference between the limit for the year and the amount paid for that year, and supportive service costs that the UMR would allow to be paid as part of operating costs, but the other funding sources do not allow to be paid. This program does apply restrictions on future tax credit applications and syndicating losses. All awardees are prohibited from applying for or receiving a tax credit allocation on a DRSL funded project for a period of 20 years from the DRSL loan closing date for that project. This prohibition will be memorialized as appropriate in all DRSL terms and conditions. If following a DRSL application and award, A sponsor syndicates and sells a portion of their ownership interest to a partner or equivalent party seeking tax losses associated with the project. 9/10 of the gross proceeds of that sale shall be remitted to the department as recaptured Excel funds. Moving over to reporting requirements. In addition to the reports required in connection with the existing HCD loan commitment, the sponsor shall timely submit the reports as prescribed. The department reserves the right to request additional detail and support for any report made. Reports must be made timely according to the dates identified in the format provided by the department and via the department's grants network portal, unless otherwise specified at the discretion of the department. The sponsor's performance under the standard agreement will be assessed based in part on whether the sponsor has submitted the reports on a timely basis. Continuing with the reporting requirements, the sponsor shall submit timely documentary evidence that the construction commenced by the commencement of construction deadline, monthly activity reports, semi-annual labor standards report, project completion report, and affordability period reporting to include annual beneficiary reports, an annual audit, an annual operating budget and schedule of rental income. I'm going to hand it over to Jet for scoring.
Hello, everyone. So the application scoring overview. Applications that pass the initial threshold review will be scored and ranked. Incomplete application or others not expected to receive an award of funds due to relatively low scores may not be fully evaluated. Next slide. So the first criterion is the number of units. The highest points go to the projects with the highest number of affordable units. Within the pool of applications, highest number of affordable units gets 5 points, the next highest gets 4 points, and so forth. Criterion 2 is leverage. Points will be awarded based on the lowest per unit request for DR Excel funds as follows. If the DR Excel funds are less than $100,000 per unit, the application will be awarded 5 points. Between 101,000 and 200,000, it'll be awarded 4 points. Between 201,000 and 300,000, it'll be awarded 3 points. 301,000 to 400,000 per unit will be awarded 2 points. 401,000 to 500,000 will be awarded 1 point. And for any units that cost more than 500,000 in DR Excel funds, they'll be awarded 0 points. The third criterion is readiness. This has several point sections associated with it. So 5 points will be awarded for confirmed site control. 5 points will be awarded for entitlements. 5 points will be awarded for proof of enforceable funding commitments for all proposed funding sources. And 5 points will be awarded for one of the following: either a complete draft of environmental assessment with source documentation, a complete draft of NEPA categorically excluded, subject to 58.5 review with source documentation, or signed authority to use grant funds from HUD, the state, or other appropriate federal agency supported with the underlying environmental review document and source documentation. The fourth criterion is the distance from the DR 4683 floods. Points will be awarded based on driving distance from a project application address to the nearest DR 4683 floods as follows. If the project is within 10 miles, it will be awarded 5 points. 11 to 20 miles, it'll be awarded 4 points. 21 to 30 miles, it'll be awarded 3 points. If it's between 31 and 40 miles from the flood area, it'll be awarded 2 points. 41 to 50 miles will be awarded 1 point. and any projects more than 50 miles away from the DR 4683 floods will be awarded 0 points. In the event of the tie, we'll be using a tiebreaker based on homeless, special needs, and other population targeting. The tiebreaker is only applied to projects that are tied. The tiebreaker score is a standalone score. For each tied project, the highest score of the following 2 criteria will be used to determine the ranking of the tied projects. The first criteria is homeless targeting. 0.3 points will be awarded to each percentage of total project units restricted to occupancy by households experiencing homelessness, or large family, ELI, and special needs targeting. 0.2 points will be awarded for each percentage of total project units that are not restricted to occupancy by households experiencing homelessness and are either 3 bedrooms or more, restricted to occupancy by extremely low-income households, or restricted to special needs populations as defined in the solicitation. I'm going to turn it back to Clint to discuss insurance requirements.
Thank you, Jet. So general provisions for the insurance requirements that will be in your standard agreement. The following general provisions apply to all policies and are detailed in section 3A of the solicitation. I encourage you all to review each of these provisions in detail prior to submitting your DR Excel application. And so the general provisions include policy cancellation or termination and notice of non-renewal, premiums, assessments, and deductibles, primary and non-contributory clause, insurance carrier required rating, endorsements, inadequate insurance, available coverages or limits, satisfying a self-insured retention, and insurance requirements applicable for the use of subcontractors. With respect to the project itself, project insurance requirements, the sponsor and/or contractor shall display evidence as applicable for the relevant project of the following on a certificate of insurance evidencing the coverages listed here, including commercial general liability, automobile liability, workers' compensation and employer's liability, flood insurance if required under the Flood Disaster Protection Act of 1973, builder's risk insurance, property insurance. No work shall be commenced on any project prior to such coverages being in effect and the required certificates having been provided to the department. With respect to additional coverages, in the event that the sponsor or any of its contractors will be engaging in any hazardous activity as part of the project, then the parties engaging in any hazard activities shall provide to the department, prior to the commencement of any such hazardous activities, the insurance coverages in such forms and in such amounts as the department may require in its sole discretion. The term hazardous activity includes any of the following: the removal, storage, and/or transportation of any hazardous material, as such term is defined under federal, state, or local ordinance, regulation, or guideline, the removal, storage, or transportation of lead-based paint, blasting, any activity which by its nature is abnormally dangerous, and any ultra-hazardous activity as defined in California case law. I'll go ahead and get us kicked off with the section on other state and federal requirements. So the first one we'll discuss is state prevailing wage. When applicable, the sponsor shall ensure the requirements of the California Labor Code, Chapter 1, commencing with Section 1720, Part 7, pertaining to the payment of prevailing wages as administered by the California Department of Industrial Relations, DIR, are met. Projects may be exempt from these requirements under state prevailing wage rules. Accordingly, sponsors should thoroughly evaluate the California Labor Code with their counsel and consult DIR as necessary to determine if the project qualifies for any exemption based on the project's unique attributes as determined by the sponsor and their legal counsel. Next slide. With respect to the federal labor standards, federally assisted construction contracts trigger the Davis-Bacon related acts requirements, as required by Section 110 of the Housing and Community Development Act and outlined in HUD Handbook 1344.1, Revision 3, the federal labor standards requirements and HUD programs, sponsors are responsible for ensuring compliance with Davis-Bacon Act requirements, as well as the Copeland Anti-Kickback Act, Contract Work Hour Safety Standards Act, and the Fair Labor Standards Act, which are collectively referred to in the solicitation as the Davis-Bacon and related acts. Moving over to Section 3 of the Housing and Urban Development Act of 1968, projects assisted with DR Excel funds in excess of $200,000 trigger Section 3 requirements. When triggered, best efforts must be made to extend Section 3 opportunities to verified Section 3 residents and business concerns to meet the minimum numeric goals. The goals include that 25% of the total hours worked on a Section 3 covered project must be worked by Section 3 workers, and 5% of the total hours worked on a Section 3 project must be worked by targeted Section 3 workers. The sponsor and the sponsor's contractors and consultants shall comply with Section 3 of the HUD Act of 1968 and implementing regulation at 24 CFR Part 75 where applicable. The responsibilities outlined in Part 75 include implementing procedures designed to notify Section 3 workers about training and employment opportunities generated by Section 3 covered assistants and Section 3 business concerns about contracting opportunities generated by Section 3 covered assistants, as well as notifying potential contractors for Section 3 covered projects of the requirements of Part 75, Subpart C, and incorporating the Section 3 clause in all solicitations and contracts. Please refer to Section 4E for HCD's required Section 3 clause to be incorporated in your construction contracts and subcontracts. Now I'll turn it over to Diana for more on other federal requirements, starting with broadband infrastructure.
Thanks, Clint. Per 87 Federal Register Notice 6364, Section 2B, 2D, broadband infrastructure in housing is required on any substantial rehabilitation or new construction of a building with more than 4 rental units, which must include installation of broadband infrastructure, except in those cases where the sponsor documents that the location of the project makes installation of broadband infrastructure infeasible. The cost of installing broadband infrastructure would result in a fundamental alteration in the nature of its program or activity, or in an undue financial burden, or the structure of the housing to be substantially rehabilitated makes installation of broadband infrastructure infeasible. This program also requires compliance with the Uniform Relocation Assistance and Real Property Acquisition Act. The Uniform Relocation Assistance and Real Property Acquisition Act, also known as URA, contains requirements for carrying out real property acquisition or the displacement of persons, regardless of income status, businesses, or farm operations, for a project in which HUD financial assistance is provided. The implementing regulations at 49 CFR Part 24 include steps which must be taken by tenant occupants, including those who will not be directly impacted by the HUD-assisted activity. Before the DR-SL standard agreement will be executed, a sponsor must either have a department-approved relocation plan for the project or a department-issued certification regarding non-application of relocation benefits and an indemnification agreement, which has been duly executed and approved by the department. This program also requires compliance with 104D of the Housing and Community Development Act. This includes the one-for-one replacement provisions of Section 104D as amended. This includes replacement housing requirements applied to occupied or vacant occupiable lower dwelling units that are demolished or converted in connection with a CDBG assisted activity. If a project site is occupied at the time of the CDBG-DR or DRSL application, the application must also include an exhibit explaining that there are no relocation of tenants that will result, or that such relocation will be temporary and it is supported by adequately documented estimate of relocation costs, or a written commitment to submit a relocation plan to HCD for approval as a condition of precedent to entering into the standard agreement. In the event HCD determines that no relocation is required, the sponsor will be required to then execute and deliver to HCD a certificate of no relocation. Projects under DRSL must also comply with lead-based paint hazard requirements. Activities performed with assistance provided by HCD are subject to the lead-based paint hazard regulations contained in Title 8, Industrial Relations, and Title 17, Public Health of the CCR, and 24 CFR Part 35, lead disclosures. Assistance provided under this program shall be made subject to the provisions for the elimination or mitigation of lead-based paint hazards under these regulations. The sponsor shall be responsible for the notifications, inspections, and clearance certifications required under these regulations, including tribal entity sponsors, pursuant NAHA SDA at 24 CFR 1000. Native American entities subject to NAHA SDA are only required to comply with the Lead-Based Paint Poison Prevention Act, found at 24 CFR Part 35, subparts A, B, H, J, K, M, and L. This program also complies with the Pet-Friendly Housing Act of 2017. The Health and Safety Code 5466 requires each housing development that is financed on or after January 1st, 2018, pursuant to this division, the authority to authorize a resident of a housing development to own or otherwise maintain one or more common household pets within the resident's dwelling unit, subject to applicable state laws and local government ordinances related to public health, animal control, and animal anti-cruelty. And with that, I'll turn it back to Jet.
All right, so how do you get us your applications? The application submission requirements. Applications must meet eligibility requirements as previously described in the threshold slides upon submission. Applications that do not meet the filing deadline requirement will not be eligible for funding. Applications must be on forms provided by HCD, which cannot be altered or modified by the applicant. It is the applicant's responsibility to ensure the application is clear, complete, accurate, and timely. Excel forms must be submitted in Excel format, so please do not submit them in PDF format. Disclosure of application. Information provided in the application will become a public record available for review by the public pursuant to the California Public Records Act, cited here. Any materials provided are subject to disclosure to any person making a records request under this act. HCD cautions applicants to use discretion in providing information not specifically requested, including but not limited to bank account numbers, personal phone numbers, and home addresses. By providing this information to HCD, the applicant is waiving any claim of confidentiality and consents to the disclosure of submitted materials upon request. Appeals. Applicants may appeal HCD's written determination that an application is incomplete, has failed threshold review, or has otherwise been determined to provide an insufficient basis for an award, including point scoring and tiebreaker. At the sole discretion of the department's written determination may include a request for clarifying and/or corrective information. For purposes of this section, clarifying information includes information and/or documentation that resolves ambiguities in any application material that will inform the department's threshold, scoring, and feasibility determinations. No applicant shall have the right to appeal a decision of the department relating to another applicant's application. Examples being eligibility or award. Any request to appeal the department's decision regarding an application shall be reviewed for compliance with this solicitation. All decisions rendered shall be made by the program manager or his or her designee. The decision shall be final, binding, and conclusive and shall constitute the final action of HCD. The appeals process provided herein applies solely to the decisions of HCD made pursuant to this solicitation. And you could read more about this in section 5 of the solicitation. The appeal deadline and process. The process to file an appeal, applicants must submit to HCD by the deadline set forth in the solicitation, a written appeal which states all relevant facts, arguments, and evidence upon which the appeal is based. The applicant must provide a detailed reference to the area or areas of the application that provide clarification and substantiation for the basis of the appeal. No new or additional information will be considered if this information would result in a competitive advantage to an applicant. Once the written appeal is submitted to HCD, no further information or material will be accepted or considered thereafter. Appeals are to be submitted to HCD at dr-mhp@hcd.ca.gov, according to the deadline. The filing deadline. Appeals must be received by HCD no later than 5 business days from the date of HCD's threshold review or initial score letters as applicable, representing HCD's decision made in response to the application. The award announcements. The department intends to announce awards in or around August of 2025. So closing and Q&A, I'm going to turn it back to Clint.
Thanks so much, Jet. That concludes the presentation portion of our webinar this morning. We're going to move into questions and answers. If I could get the next slide, please. Before we get into Q&A, I want to highlight that our program email address is dr-mhp@hcd.ca.gov. And so if after today's session you have additional questions concerning the DR Excel program requirements, feel free to send an email to dr-mhp@hcd.gov to obtain an answer to your question. Next slide, please. With respect to the question and answer session, you can submit your questions through the Q&A box located at the bottom of your screen here in the webinar. You may also submit questions to the email address dr-mhp@hcd.gov. From the webinar Q&A, as well as questions submitted to our email inbox, we will compile answers to all questions in an FAQ to be posted on our website. We will also post a recording of this webinar to our webpage at a later date. Any capitalized terms that appear on the slides or that appeared on the slides or in the solicitation document are defined, and our webpage is really long, but it's there. Under grants and funding, disaster recovery and mitigation, you'll find your way to multifamily housing program, the DRMHP program. Thus far in our Q&A box, we have received 3 questions from participants. I'll go through those now while you load any additional questions that you have for our team to respond to. The first question received and responded to included, will the funds be distributed proportionally to the 5 counties, or will the highest scoring project be selected regardless of geographic area? And the response to that is all projects will be scored objectively and awarded funding based on the scoring criteria. In other words, there aren't specific geographic set-asides within the 5 mid-counties. The second question received was, given that the program intends to replace low-income housing tax credits, which make up a majority of most project sources, is the goal to only award to 2 or 3 projects? Really, in response to that, the goal is to fund the most number of projects based on the need to move projects into construction within 180 days of awards. And so funds will be awarded based on the highest scoring project and so on, to fill those gaps within compliance with the restrictions within the solicitation. For the third question we received, can you elaborate on how points will work based on the affordable unit count? I would indicate that the proposed project application with the highest number of total affordable units will get 5 points. And then the next project with the next highest level of affordable units will receive 4 points, and so on until we run out of points. So there'll be 5 projects that receive points, 5 points, 4 points, 3 points, 2 points, and 1 point, based on the total number of affordable units provided within each of those projects. Just taking a quick peek at the question and answer box, I'm not seeing any additional open questions at this time. So if you do have questions, feel free to submit those through the box. We'll hold on for another couple of minutes. And of course, you can always use our email address, dr-mhp@hcd.ca.gov, if you have additional questions at a later date, once you've had an opportunity to review the solicitation, the application materials, and so forth. Okay, not seeing any additional questions coming in. I think we'll go ahead and bring the webinar to a close. Again, if you do have questions, please feel free to reach out to us via our email inbox. We'll get these questions along with any others that you submit during the period between now and when we publish FAQs. Get those written responses loaded into the FAQ, posted to the website, and look forward to receiving some really good applications, and wish you the best of luck in the funding competition. Thank you all for taking the time to attend today.